Uh, uh, Luis, feel free to unmute whenever you're ready, brother. Guys, welcome to another edition of the Foundation More Protection call with myself and Luis Moyano. Um, Luis is kind enough to be taking some time off his family hiatus, little mini vacation trip to join us for this morning. So it won't be that long of a call. Like I said, today is also his wife's birthday, so happy birthday, Crystal.
Yes,
Um,
maybe if you get to watch this training, maybe on a replay later on, I just want to let you know that I'm so thankful you're in my life. We have a beautiful family, and I want to wish you a happy birthday.
Dude, that's awesome, man. Love it, love it. But like I said, today, just because courtesy of Luis's time and your guys' time, like I said, this is week 2 is down of February. We're on to week number 3. So super excited. Like I said, this is one of my favorite months.
Yeah,
Just
buddy,
how consistent.
17K last week.
Dude, that's hey, there you go, man. Turning and burden. I love it. But
Coffee's for closers.
all day. But yeah,
Marcus, you know what we
today
want to talk about today?
I think we're talking about the basics, right? What's
I
the
want
number
to
one
just
question?
I want to strain it out. Like seriously, so many people are just so confused, right? Like so, you and I are both very active on social media, right? And if there's any people that are watching this on social media, this you guys have seen this postings, right? Asking a mortgage protection question, and then some dumb agent saying, "Oh well, I don't sell term," or somebody else say, "Why would you sell a decreasing term policy to a client?" You know, and it just dawns upon me that so many agents here just don't get it. Like they just don't know what mortgage protection is, right? And
Mhm.
so, do you run into that? Do you see that here and there?
All the time, man. Between all the different social media groups about insurance, you name it, it comes up a bunch. But I mean, the really just like file expense, it's not really an insurance product; it's a concept. So mortgage protection is just it's an overall concept with one goal in mind: is protecting someone's home or family, right? Very very simple. Same thing I've used. You see me post in our group. I did a living expense protection um, plan. It's once again marketing term for I sold some renters actually a term policy to help with living expenses. It all boils down to a reason to go inside of a house and talk about insurance product, right? Would you agree with that, Luis?
Without a doubt, right? Like I don't think you can look up any company, and some companies do have it, but you can't really go out there and say, "Hey, I'd like your policy for mortgage protection, please." So let me back up a little bit, right, Marcus? Let me tell you, and just to explain to some people, mortgage protection for like maybe our parents or people that are 60 and above now, they maybe saw it offered by their bank on like the first house that they bought. And back in the day, it was common for the mortgage company to offer you some type of mortgage protection, which would just add some dollars onto the actual mortgage, right? And then we get paid on the mortgage. So it's no longer that. Back then, there was only two types of mortgage protection. Type one was a decreasing term. Your monthly payment stayed level, but the death benefit would actually decrease. The concept behind that is that as the equity increased and the amount that you owed on the house went down, so did the amount of coverage. And therefore, they were able to offer you a little bit of a better price, but nothing like amazing, right? So that was one. And then the other option was just a straight accidental death, right? If you Here's your $200,000 for $7 a month. If you pass away in an accident, don't worry, we pay for the house. So that was the traditional mortgage protection that was offered by the banks and the lenders. So what started happening is that when people started passing away, if they somehow qualified for the mortgage to get paid off, the money would go to the bank first. And then if there's any left over, go to the family. But some families started complaining. They're like, you know what? I don't want my house paid off. This house is not a house we want to keep in the family. That we want to sell it. I need that money for other purposes. I don't want it to go to the mortgage. So because of that, the bank said, all right, well, and they still offer accidental death. They still offer. You don't find many banks out there that actually offer life insurance, right? And the life insurance that they do offer, it's obviously underwritten by somebody else. Usually Hartford's a big one that you see out there. And if you look into the policies, they all have a lot of little clauses that make them not good policies, right? So that's the only thing that's offered, but there's nothing offered by them anymore for mortgage protection. So the banks and the companies said, hey, we're going to stop that and we're just going to go ahead and outsource it. And all the insurance companies out there, they're pretty smart. Like they make billions of dollars. They went out there and their little light bulb turned on and they said, well, now we're going to go ahead and put this concept together for everybody and offer mortgage protection. Or maybe the insurance agent said, hey, let me go ahead and turn a light bulb on and offer mortgage protection. But either way, mortgage protection now is just a marketing opportunity for us to get in front of a customer. With that said, Marcus, is there a single product that you offer for mortgage protection?
No.
That simple, right?
It's not a one size fits all.
It's, oh God, I said it so often. What I have to sit with you because it's not a one size fits all. It's not like you're going to call me and, hey, Mary, you're 52 and you owe 300,000, $799 for you. Nope, it doesn't work that way, right? Yes, you guys know everybody's different, and we use that in our speeches and our calls. So with that being said, I need you guys to just like wake up, right? Literally wake up and stop pigeonholing yourself. Just because you go into final expense appointment, it doesn't mean that a whole life product is going to be the only route for them to go. There's better options. And the better agents that understand this, the better agents that say, hey, there's more than one way to skin a cat are the ones that are going to be the problem solvers, the ones that are able to put puzzles together pretty quickly, and the ones that are going to find the way to provide the most value for that client. What I like to determine is, do they have anything permanent? Do they only have term? What's their budget like? And within that, I use many of the array of products that we have to be able to fill their needs. Usually the magic number ends up being, give me permanent protection, give me at least $100,000. That's usually what everybody wants. But that's kind of what I'm saying. Like, it doesn't matter. It doesn't have to be term. And if it's term, that's okay. Give the customer what they want, right? If you want to show them new products and IUL, if you want to show them the whole life, everybody's different and there's different purposes. But once you find the money, once you find the budget, once you find their comfort level, once you find their need, their desire, their want, now you can formulate a plan and not leave money on the table, right? Because you can offer something that's going to be best for the product and for the customer. And you know what's really cool about that?
What's that?
Once you do that and you actually show that you're doing something specific, tailored for them and why this is the best plan possible, ain't nobody coming in behind you and canceling your application or offering something better, because you took your time and you did what's best for the customer. And if you do what's best for the customer, there really shouldn't be any way possible for anyone to come over and do something better or change their mind. So that's my 2 cents on what is mortgage protection. Mortgage protection is a concept. It's an opportunity for you to wake up and help a client. That's it, man. That's all I got today.
Boom. That's awesome. I mean, it really boils down to fact finding. I mean, just like Luis mentioned, we've always talked about this last several weeks. It's all about asking the right questions, right? Be able to dive in, ask those questions, uncover the different pain points or different areas of concern for that particular person. Just because we're talking to a mortgage protection client does not mean we don't ask about their final expenses. We don't ask about the barrel options. We ask all those questions to create that tailored package for them. Final expense people, you guys should do the same exact thing. Simple question. Do you guys rent or own this home? Right? Doesn't matter what their answer is. It can be rent or own. You can put something in place, whether it's a mortgage protection product to cover what I would call a critical time period, 2 to 5 years of coverage of that house mortgage payment or that monthly rent payment, right? So now, excuse me, so that sale that went from that 10,000 burial only cremation policy or casket policy, now you're able to double up that coverage and get 6 to 12 months of house payments covered with the same whole life vehicle. Or if they're young and healthy enough to qualify for a term product, now you can cover 50 to 100,000 of that debt for the next 15 to 20 years on top of their whole life product. So you're presenting multiple options to them just by simply asking the right questions to
Mhm.
address more areas of need, right?
Mhm.
It's as simple as that, guys. But it's a valid question because, once again, it's not a specific product. It's not a specific style of coverage. Never always term, never always UL. It depends on what the client needs, and we tailor that product selection to that particular client. I mean, that's really the nuts and bolts of it, but you can definitely increase your sales by asking more questions and uncovering different pain points to help drive that prospect down a certain path. And you then become the solution solver or solution builder, problem solver, based off asking those correct questions, be able to tailor that plan to their exact needs down. So
Yeah,
that,
it's pretty amazing, right? So really quick, as we're touching on that, and this is just to help everyone that's watching, all the agents out there. We're putting together a formulary, a questionnaire, so it's more standard for everyone. But there's a bunch of different versions out there, and it's as simple as just asking every question on that questionnaire, right? Because the moment that you touch on all that, then it's gonna give you a bigger picture. And you don't present, you don't go into product, you don't go into pricing until you've gotten all their information. Because it's gonna take you knowing everything for you to formulate a solution. That way you don't miss anything. And if you do that correctly, the better that you do that, the less pushback you have. The reason is because you're able to find what the need is, right? And you address the need, and you go ahead and wipe out any concerns that they might have ahead of time, right? Simple example, Social Security and bank card. Before I go into it, and I tell them like, hey, listen, if you find something you like and it makes sense and we find it within budget, then we got to send the information over to the company. They're going to ask you a bunch of health questions. They're going to ask you, your social, so they can look at your health history, and they're going to ask you your banking information. Once all that's good, and then they'll go ahead and give you an approval or not. Are you good with all that? Because if they say no at any point, then I want to address that before I even show my prices, before I even show my product, right? That's my card in my pocket. That's my ace. I'm not letting that go until I know that if we go through the steps and they like what they see and it's a good company, they feel comfortable, then they're going to have no problem giving their social, giving their banking information. It sucks to get to the very end of the application and be like, well, I ain't giving you that, and you can overcome that and outpass it or outdo it by just being able to be, straight ahead, or just being open about it and confronting it from the very, very get-go. So I just wanted to touch on that as a little piece of it. Stick to your questionnaire, ask questions, and hold your aces till the very end. And by then, you should already know that you have a sale.
dude, that's awesome. Yeah, been there, done that. Went through the whole pitch before. Lady wasn't gonna give up her social, and that was a wasted of 45 minutes to an hour that I can't get back. Time is money, guys. And I learned that the hard way by not fact finding, not asking the questions such as stating, hey, if the company says yes, they will draft your bank. That's in my presentation, going through my orange bubble flow chart, which many of you guys have. That maps out the entire process, A to Z, what I am here to do. My intention statement is on those orange bubbles that explains the entire process. And that step, because the whole idea behind it, it's one, to let new agents understand the process and keep them on track. But two, it's to uncover any major objections on the very start of that presentation. I want to get the hard objections within the first 3 to 5 minutes. I'm not trying to wait for the hard objections to come up 45 minutes into the actual presentation, right? So literally I asked, if they say yes, they will draft your bank, Mrs. Jones. And I'm looking for some feedback. Whether it's going to be nodding her head, saying yes, that's going to be fine, honey. Whatever she says to let me know and acknowledge she understands that they will draft money from her bank account. As well as if you're a final expense agent, those are the same time you're going to ask, hey, do you have one of the local banks? Or do you get your deposit onto a Direct Express Social Security card? Do you not have a bank? those questions are coming up on your filing expense appointments, so you know what product line to deal with, or if you're not able to even help that actual client if they don't have an actual bank account. Um,
Mm.
but really, what I always tell people, especially if you're brand new to the industry, you want to work your appointment backwards. What I mean by that, it's in your mind before you even get there, you want to go from, okay, how do I show the quotes? What information do I need at the very front end to get me to that next step? So I go in with the end in mind of an actual sale, then I work backwards to figure out what pieces of that pie. Now, granted, we've done this already, so the legwork's mostly done. You just got to plug into an actual presentation that fits your personality, which that's what we're in the process of building out for IFG as a whole company. Some pretty awesome stuff me and Murray are building with the help of a lot of the advisory and executive board members on the actual partnership to get a clear cut presentation, which will be broken down into 4 different ways of doing it, depending on lead type. So more to come on that stuff once that stuff gets a little bit closer to the actual build date.
Hey, Marcus, just to be a little spontaneous here, give me
Yeah.
like your first minute in a house. Like, what's your intro like?
Yeah. So, hey, Luis, Marcus, I'm the field benefits agent assigned to your actual case. Stop it on by to go over some information yet. Request it real quick. It won't take more than about 5 to 10 minutes. Then what I do is I slide that lead in front of that person and I tap on it twice. So here's a letter you sent back in, Luis. Tap on it 2 times. That's going to draw your eyes to that piece of paper. As I'm talking, you're reading back through the letter that you sent into me. So if it's a mortgage protection letter, you're going to read through the bullet points that are basically going to be cover entire mortgage balance, disability, level premiums, money back option for the return of premium, and then you'll see your information that you filled out in terms of your name, address, date of birth, some of the additional questions we do ask on our actual lead cards, whether it's diabetes, blood pressures, so forth. As I'm talking, you're able to read that. Once you see that part, I go into the old way versus new way. So the old way is exactly what you said previous. Hey, the old way this used to be done, it was done by the banks. You paid for it, the bank owned it. If anything happened to you, the bank ended up getting the actual check. But after the housing crash, 2008, 2009, they made it separate. What that means, you actually own the policy. Therefore, if you go bigger house, smaller house, go get a beachfront condo, this policy is now going to transfer with you to that new property. What that does for us, it gives us the ability to, one, identify a tailor-made product for your exact needs, as well as customize it to fit your budget option. So right there, I'm getting them to agree with me. They're going to see the value of old way versus new way, and then they're going to agree when I say budget. I want them to know my job is to not break the bank. Get them to nod their head, get them to chuckle. Then from there, I'm going to go into the process. So my process is all we do today is an applicant. Sorry, there's a question popped in.
So what is the real reason? The real reason is probably not very profitable.
Real reason is the housing crash. So what ended up happening, about 40% of the people during the housing bubble crash, this is a different side note fact to this Roger's question. 40% of those people technically weren't underfunded loans. They were critically ill. They couldn't pay their mortgages other than the bad loans. So 2008, if you did a little bit of research, there's bad loans that were given of people that didn't deserve those. And then there was also people that had loans that really couldn't afford those loans because of an ailment, they got sick or ill, whatever the situation was. So that's the main gist of that actual story. But all we do now, it's all done privately through our insurance companies. So people can actually go buy their own policy that they own. If they did the old way, when that mortgage would refinance, you would sell that loan off, you would move, that transaction would trigger that policy to stop. Meaning, if you're 5 years older or you have more health challenges, you're not able to get onto that old plan again at the previous price. You have to go get a brand new policy with new underwriting. And depending on the situation, a lot of people weren't eligible at that actual point. So you do some research on the actual housing crash. It wasn't just the bad loans. It was also people that truly lost their houses due to health. So they basically said they got rid of that whole clause of having the internal mortgage protection option. That's why there's I've only seen 2 banks truly offer it. One being Globe Life. They sell an accidental death policy. They'll get a letter about a month after buying a house. I've gotten several on my end, as well as, like Luis mentioned, I've came across one bank that actually offered a decreasing term that they can purchase from the actual bank themselves. So you can do some more research on it and just kind of get some more facts of the actual story. But everyone knows of the housing bubble. So I used the 2008, 2009 timeframe. That's really when things started to shift into that mortgage protection space from a separate marketing standpoint. So I kind of built that into my story to kind of get them from A to Z and understanding the process, how things have changed and how things have gotten better for the consumer's sake. It's a good question though, Roger. Yeah, I mean, you can. I mean, if you want to look at it from like an airline standpoint, or even the Pacific Bell, the AT&T, the whole deregulation space, that's fine. I've heard that story as well. So yeah, either one works. It's the same point of either way you look at it, it's different. It's more consumer friendly than what it once was previously. But after I explain that stuff, I tell them all we do today is an application. That whole process takes about 30 to 45 days start to finish. So I let them know right off the gate, we are doing paperwork today. My intention is to show you options, that you pick something, and I'm doing an application to get you covered. That's my intention statement. From there, the insurance company is going to say one of three things. Yes, maybe they want more information from us, or they're going to say no. So straight up, I'm saying they're going to either approve you, deny you, or they're going to ask a couple more questions to figure out why something popped up or whatever those questionnaires end up triggering. From that point, if they say yes, Mary, they're going to draft the first premium from your bank, which means immediate coverage. So if they're drafting money, that means you're immediately covered. So that's no post dates. That's saying drafting your bank as soon as you get it approved. As people know, those are experienced, you don't want to post date on term, because if the money's not there today, you basically just increase your chances of getting a chargeback or a in-force not taken occurring due to money at a future date. They always want to avoid doing the post dates. So that statement avoids that for me. Now, it doesn't mean I don't do post dates. If it comes up, hey, this person needs 4 or 5 more days or paydays on Friday, you can work with them, but get into the habit of saying immediate coverage that will draft upon approval. Once you go down that rabbit hole, you're just going to stick to that actual script of it.
I always tell them, like, listen, the first payment comes out up on approval, but then after that, you can select whatever day of the month you want. What day would you want? And just make sure that it's the best. But they know you're getting drafted right away. Oh, wait, I can't have it drafted right away. Okay, well, I'll request it. I don't see a reason why they wouldn't accept it, but it's not up to me.
Correct. Yeah, and what we're referring to is some carriers give that option for the first draft date to be selected and then the subsequent date to be picked out for each month. Reason you don't want to do that too. So prime example why you don't want to post date. Foresters, for example, if you post date an application, you're actually going into their grace period. I've had people end up getting letters every single month because their payments the third week into the month. On Forester's paperwork, it actually shows this missed payment, and they keep sending out a statement to them. So avoid that on post dates because it makes the grace period get shorter if it's upon the issue date of the policy versus the draft date. So had that happen when people miss payments, they start getting letters, they start calling you, yelling at you. That's why it happens if you start post dating stuff way too far out. So try to avoid it by giving a clear, concise statement of what's going to happen. Hey, upon approval, they're going to draft that first premium. Once they draft that first premium, Ms. Jones, they're going to mail you a policy. It takes about 5 to 7 days to get that policy in your hands. Once that policy is in your hands, now this part is not on my fact finder. It's something I say verbally. Use something called a 20-day free look period by state law. So that's a generalized term. Look at your specific state to understand what the free look period is. Some are 15 days, some are 20, some are 30. Just depending on your state, they're slightly different. I say 20 if I'm in multiple states, I'm able to always at least get close to that number if with either a couple days short or a couple days extra to actually work with. So from there, I mentioned only 2 options when I say the free look period. You can go up in coverage or you can go down in coverage. I do not say the C word. Don't say the word cancel. It's applied on the free look period, but that's not something we used to say it. I used to say it every single time. And when I was saying it, I was getting a 40% cancel rate because I mentioned that they could cancel their actual policy. When I stopped saying the word cancel, my placement went up another 40 points. So I just say you can go up in coverage or down in coverage, whatever you're comfortable with, we can make it happen. So that's giving them the open door to be able to get their hands on an actual policy, review the document, be able to give me a phone call back if you have to make any adjustments, up in coverage, down in coverage, whatever you want to do with it. You're in full control the whole entire time. And then That's pretty much that's it. The actual presentation at that point in terms of the prelim. From that point, we get into the actual fact finding portion of their names, birthdays, address, all that fun stuff we need for the fact finding portion, health, current coverage. But that's my expectation on the front end. I tell them what I'm going to do to mitigate any pushback at the end. The whole idea behind it, you want to uncover the objections on the front end, not on the back end, because then you can address them before you really get started. Um, and for people that are getting some objections that should have been covered on the first step, all that means is that you either didn't explain it correctly, you went too fast, the client didn't comprehend it, or you just got to circle back to it. I've done it several times. That, hey, Miss Jones, you said they're going to draft the policy immediately. What? Yeah, that's fine. Let's go back to the section here. And I'll go right back. Remember when I said if they say yes, they're going to draft that first premium immediately, then about a week later, they should mail you that policy. You remember that part? Yeah. Okay, perfect. That's what I was referring to. Then once you get your hands on that policy, it will call that 20-day free look period to go up in coverage or down in coverage. Whatever you want to do with it, you're in full control the whole entire time. So sometimes you just got to circle back through it. For every reason, like I said, TV could have been on, someone could have called her mind got sidetracked for a hot second. Don't be afraid to circle back through your presentation, because the feedback the client gives dictates if they're following along or not. So if you're asking some pre-closing questions or some trial closes, as many folks call them, or get some verbal or head nods, some type of body language to show that they're on the same page as you. That's why those questions are built the way that they are, to get that interaction from the client to make sure they're on the same page. Would you agree with that, Luis?
Without a doubt, man. It's you said it from the get-go, from the beginning. I appreciate you going into it, man. You went into it like from depth. I was just literally gonna say, like, you walk into a house and you just gotta lay it down, you know, be like, hey, you guys filled out this form. Tell me, what is it you were looking to get out of this? And let them talk. Oh, well, I wanted to make sure that, you know, the house gets paid off. Okay. I'm just gonna ask you a lot of questions. I just really want to get a good understanding of where it is. Just to tell you a little bit about me. I've been doing this for a long time. I'm a broker. So if we have to shop around, you know, we will. No one's gonna ever beat me on price, but I'm gonna make sure I do the best for you and your family. Cool? Cool. So what is it like? What's the reason behind why you want the house paid off? You know, is your wife gonna be getting it? Is your kids? What happens if your wife and you pass away together? And this is when you just dig the why from right beginning. You let them tell you and sell themselves. Like, I need this. There's those ones that will tell you, I was just curious and wanted to see the price. Like, you were curious about price, or you were curious about what it would take to protect your family? I was curious about what it would take to protect a family. Or some people just don't care. Like, I don't really have family. I would just want the house paid off. Why do you want this paid off? Like, what's the point of that if you don't have anyone to go with? And you just back them up into a corner and you let them, like, if they don't sell themselves and they tell you why they really need it, it's more likely they're not going to be a client that's not going to be too serious about it. So get your ducks in a row, lay it out at first, let them like tell you and let them want the policy. If you can master that little piece of it, it just becomes easy after that. It just becomes fun.
Yeah, I mean, even more than that, man. I mean, everyone had a moment that triggered them to fill out a piece of paper with their information, phone number, best time to call, fold it back up, put it in the envelope, put a stamp on it, and walk it down the driveway to their mailbox. You can't tell me someone that was just shopping for price out of curiosity went through those several steps just to shop for price. There was something in the back of their mind that triggered them enough to take those several intricate actions to send in information and get someone out there to give them a phone call to talk to them about coverage. There's a reason behind it. Our job is to uncover the reason. It's to dig that why out of them and tell them. I mean, I've had a couple people that, unfortunately, they're those types of people. There's going to be one out of every 100 people that just fill out a letter just because they're bored. It happens. I'm not going to say it won't. It will. But
or you even get those that I got so many, I thought I had to fill this out.
Oh, all the time. If you thought you had to, okay, here's the letter. That's why I do the tapping on the letter for them to read it, because either they're going to get deer in headlights of why did I send this back in, which I'm going to be able to see that. I'm like, oh, you look confused. Is something wrong? I thought I had to send these back in. Okay, well, after you read it, is there anything that concerns you? And typically, if we have a husband and wife, as he's saying that, I'm looking directly at the wife. let her hear the stupidity that comes out of that guy's mouth.
Mhm.
I was just curious. I'll ask. So you weren't concerned in case you die? House is paid off for Mary. Looking at Mary, letting him talk inside the background. It gets uncomfortable for her when she hears his actual answer. If you haven't
And then
done that,
every now and then you have those girls that are gonna stick up for the guy too, and oh well, whatever. Yeah, he's right. We'll just figure it out. You get into one of those, just know and say, thank you so much. It was great to meet you guys. I hope that you're in God's grace and nothing bad ever happens to you.
good luck.
And just
Go out.
leave that appointment as
Yep.
fast as you can.
Yeah, those are time wasters. Yeah, there's no.
100%.
I've tried to fight people on it, and I've called husbands out before. It's not worth it. It's a waste of time.
Yeah. You will find the tough guy macho husbands out there that will just say things. But if the wife is backing them in their stupidity, I guess, right? In their BS, then just know that appointment's not going to go anywhere.
You're not.
You didn't have one person on your side.
Yeah.
Yeah.
But I mean, with that being said, though, I mean, don't. Sometimes people that do fill it out, once they let it marinate a bit, and then you incorporate the wife, it puts him on the spot to really think about what he did and why he was doing it, and you do get some really good answers. I mean, you do get some hard, concrete answers, or their minds soften up a bit to kind of open up. They're usually sitting like this the whole time, and then eventually they kind of go, "Well, I was thinking about this." So it does happen, but I mean, once you've done this, like I said, at least sit down with 20 to 40 people, you'll start to be able to read people and understand what kind of house you're going into. Those are the fun ones when you're training agents. We can kind of prelim say, hey, this is going to be a sale or this is going to be nothing. And then you kind of say, hey, here's how I knew this. Here are the signs I saw along the way that kind of told me this was going to be this outcome. Not saying judge a book by its cover. Just once you've done this a while, you'll start kind of catching on to some of the same telltale signs that happen over and over, and you'll learn to not waste your actual time. So that's when I became the most profitable I have been inside this business, is when I stopped wasting time on the non-buyer by asking more direct questions on the front end of my presentation versus the back end. I mean, I'd rather be out in and out of the house in 15 to 20 minutes knowing they're not going to buy and on to the next one or onto a door knock than wasting a whole hour fighting with someone to see if they're going to buy it.
100%.
I mean, it is an acquired skill. You're not going to learn that out of the gate. But I'm telling you, once you guys do this enough, you'll get that spidey sense, as we like to call it, of, hey, this is not going to work. Let me see. Garrick said, thanks for the tips, guys. Dig deep. The quality of your pay is equal to the quality of your questions. Do this. I love that one, dude. That's spot on, man. I mean, he's totally right. And that's coming from someone on the telesales side, which is a lot more difficult, I would have to say, than on the in-person side. Not saying I've sold MP over the phone and I continually do it, but it is a different set of questions, a different set of, you have to make the emotions come through by asking good questions, which you can do it 10 times easier. You can have the simplest questions in person, but on the phone, you have to be precise. You have to be a ninja and be able to navigate and bob and weave a lot of those circumstances by asking good quality questions to get the right answers you're actually looking for.
Marcus, let's go ahead and let's take it to open questions. Guys, go ahead and type it in either on Zoom or on Facebook. Garrick, thank you so much for pitching in and commenting. Garrick is a beast out there. So if you're watching this and you need somebody to just give you some good guidance, he's so structured, so well disciplined, not only just in the telesale side, he's also done the face-to-face. So he can give you guys good, proper advice on both sides. And he's also an advisor, team member that is here to just help all of you guys, right? So that's the beautiful thing about the partnership. Literally, no upline, anyone in the partnership is technically a person that you can go ahead and get knowledge from, you can plug into, they're going to be able to help you out. And the structure that we have, just Medicare, life insurance, downlines, you just grow a beautiful business here if you guys understand it correctly. So just to kind of do a quick recap as any questions might be coming in, mortgage protection is just a concept. That simple, right? It's what you're going to do to be able to protect that family to the best of your abilities. And that's all mortgage protection is. It's just the opportunity for you to get in front of them, be genuine, show them you care, and say to you, you know, we're going to try to pay your house off, but most importantly, we're going to find the best way to make sure your family is well protected. And that's kind of where you leave it at. And so I don't know, man. That's kind of all I got. You got anything there, Marcus?
No, man, this was a great call, great topic. The questions from Roger and Garrick, the comments, we appreciate them, guys. Any other questions, guys, direct them to the Facebook page. Drop them there. And there's about 10, 12 people watching on that side of it. We'll be definitely answering throughout the day. But my man Luis has to run. It's his wife's birthday. Go celebrate, bro. And we'll catch up with you and look forward to seeing you in the next several weeks, man, when we get together out in Charlotte. So
Have a good one, guys. Thank you.
hey, see you, bro.
Bye.